Welcome back. You still tuned into Midcap Radar on CNBC TV18. Well, a lot of earnings that have been trickling in fag end of the earnings season. So let's get to analyzing them. Puravankara is the first corporate on our radar today on the back of Q1 earnings. The company recorded its highest ever collections bookings actually in this quarter. Volumes nearly doubled on a YOY basis. Meanwhile, realization that was flat on a sequential basis but did see an increase on a YOY basis. To discuss the earnings and more, we are joined by Abhishek Kapoor, the Group CEO of the company, and detail these earnings as well. Abhishek, good afternoon. Thank you so much for joining us. Well, highest ever sales value is what you've seen in this quarter. It's around 1100 crore rupees. But is this sustainable number, or do you think after this 1100 mark it would normalize to the previous levels? What is the outlook for the entire year?
Hi, good afternoon. Thank you for having me on the show. The performance of sales is reflective of two things. One is, of course, the performance of the company. This is the first year as an organization we have beaten our Q4 number in a leaner quarter. And of course, reflective of the fact that we have done 119% growth on a YOY basis is clearly the fact is that the business is performing. As far as sustenance is concerned, we have seen improved performance of sustenance projects. And of course, add to that are new launches, and that is what is creating these kind of sales numbers. We are expecting to continue the same trend. We are launching more projects in this quarter and the next quarter. During the year, we have about 16 million square foot of total launch developable area. Our share of it, developers' share of it, is about 13 million. With that, I believe that we will continue to show significant growth in our pre-sales number.
So when you mean significant growth, what would that mean? Because if we extrapolate these numbers, that would mean around 4,400 crores of sales this year itself. Do you think that is an achievable number, or you will do around 3,500 to 4,000 crore rupees?
Look, we don't normally give a forward-looking statement, but I can tell you is this is just the beginning. And as I mentioned earlier, we have significant launches coming in the upcoming quarters. And if you typically see our first quarter to the fourth quarter, you normally see improved numbers. So if we have done 1126, then I leave it to your best judgment to guess what the numbers will be, but definitely much better than the last year's number.
Okay. You said 16 million square feet of launches this year, right? Can you break that up in how much in Q2, Q3, Q4? And what about your affordable housing arm, Provident? That's been, a bit subdued this quarter. What happened?
So that's a good question. The reason why it was a bit subdued was because we didn't have a launch. And in fact, it's only on sustenance projects. And if you go a little more granular, you will see that the numbers have been much, much better in terms of the performance of the projects. But in the upcoming quarters, of the total 16 million square foot, we have about 7.5 million square foot coming in from Provident, and 3.5 from Puravankara, and about 3.5 from Purvaland. All of this will create a lot of traction, and obviously you will see Provident numbers pick up significantly in the coming quarters. So on an overall basis, if you break this down a little more than 50% of these launches are in the Bangalore market, then of course in Tamil Nadu, Kerala and the West. So we are expecting that, between all of this, we'll see good numbers.
So, Abhishek, the general conversations that we've been having with the experts and companies as well, the idea is that affordable housing segment has seen a lot of pressure because of the rate hikes, while the premium end has not seen any impact. In fact, we've seen a surge in bookings there. Provident caters to the affordable housing segment. Do you think this pressure could continue there despite more launches coming up? What is your sense?
Not at all. In fact, if you see, the numbers have been better, as I mentioned. At a higher realization, the numbers have been better for Provident Housing on a sustenance basis. So, we are seeing very, very good traction. In fact, we should be launching one project in this quarter, and we are anticipating good numbers there as well. So, we are not seeing any slowdown as far as Provident is concerned. In fact, we believe that you may have a different question in the upcoming quarters and how it has suddenly outperformed. It's more a matter of supply and launches than it's a matter of sales performance.
The realization improvement number on a year-on-year basis, could you segment it a bit in terms of geographies? Which geographies are seeing an improvement in pricing? or break it up in terms of your commercial and even the affordable housing. Give us some more details into where realizations are higher and where it's lower.
So realization is consistently higher across all the categories, which is Provident, Puravankara and Purvaland. If you look at the breakdown of numbers, you would see that Puravankara has shown about 64% growth, Provident at about 19% versus last year, and Purvaland about 17%. So, as a number, if you look at, we have done phenomenally well on all the counts. What's important for us is to see that we are continuing to show improved sales on increased realization. So clearly the performance of the business has been in line with the market, and we are not seeing any slowdown. So across the board, if you look at appreciation, it's anywhere between 8 to 12% appreciation that's happened between all of these brands. So we are continuing to see the appreciation and the absorption rates.
Okay, so when you talk about 16 million square feet of pipeline going ahead, what would that do to your debt? Will you have to put in more money? Debt is around 2,200 crore rupees, and that's been the level for last couple of quarters. Will this mean higher debt? Will you be looking at any equity raise as well? Something of that sort in the works?
So from the debt point of view, we are consistently at similar levels. We intend to keep it at similar levels. Of course, all of this debt is getting realized and getting repaid from the residential ongoing projects. So we have a scheduled repayment of debt that will happen. In the meanwhile, what will also happen is we are looking at a lot of new acquisitions. We are currently in the market very, very diligently evaluating projects and in very advanced stages of negotiations. So we will see a lot of business development activity which will come in upcoming 2 quarters. Having said that, while we repay debt, there will be also capital required for new acquisitions, and therefore the debt numbers will remain the same. But what is important to look at is on debt per square foot of area under development. That's how we look at our business, that the scale of the business should justify the quantum of debt that you have on your books. So if you look at that over last 4 years, we have brought that down to half, which means it was about 2,000 rupees a square foot. Today is down to about 1,000 rupees a square foot of area under development. So that essentially is adding directly to our bottom line. I mean, what I'm trying to say in other words is that imagine if, I have the same debt at the end of 3 years. Instead of servicing at 10%, I would have paid about 660 rupees a square foot of interest. Now I would land up paying only 330, which means 330 has gotten added to the bottom line. So better and more efficient use of capital is how we are looking at the business.
Okay. And what about the EIF money, 700 crore fundraise that you had seen? How much has been deployed already, and what's the outlook?
So the first tranche is already deployed. In fact, we are expecting to see the launch of that project between the end of this quarter and next quarter. And of course, we are in advanced stage of deploying the second tranche and then the third tranche as well. So we are anticipating that we should be fully deployed before December of this year. And of course, we'll start seeing the returns coming in also before the end of this year, because we will be launching the first project which we have acquired under the fund. And once the business starts, then I think we'll go back to the market again.
Okay. Okay. Thank you very much, Abhishek, for joining in, and wish you a very happy Independence Day as well. Enjoy your day. We'll get into a break on that note. On the other side, we'll be joined by the management of Wonderla Holidays to talk more about their Q1